Hey everyone, welcome back to the Tax Show for People Who Owe. I'm Dave.
And I'm Phil.
And today we have a great show in store. We're going to provide you with some taxication.
Tax of what?
Phil, not intoxication. Put that cup down. We're going to provide you with what, Phil?
Some tax education.
There we go. And what specifically are we going to help our taxpayers out there do?
Hopefully avoid some surprise tax bills.
Now, Phil, what are some of those surprises?
Well, the top surprise we often see comes in the form of the CP2000, which is basically a letter from the IRS letting you know you forgot to report all your income.
That's not a character in Star Wars. That's an actual bill that surprises you quite often, right? So let's talk about the CP2000 and how someone might get one.
We get it. It's really hard to keep track of all your tax records and make sure you report every single line, whether it's a 1099 interest income or even a 1099, maybe you drove Uber one time during that year. And it happens often. Sometimes the income's small, sometimes it's large. But IRS will cross-check your tax return against their internal database to make sure no item of income is missing.
And what's even worse is that some of these providers that are supposed to give the IRS the information or file that 1099 on time. And when is that deadline, Phil?
January 31st for W-2 and 1099.
That doesn't always happen. And guess who's on the hook when that 1099 comes late?
You are.
You are. And that will trigger that surprise CP2000 bill and leave you calling to somebody like us to try to solve it.
And oftentimes, that's not without penalties and interest. If the income that's missing is large enough, you can be hit with an accuracy-related penalty for an extra 20% on your tax bill.
Yeah, unfortunately, you get the blame for all that mess, which doesn't seem fair. Phil, let's talk about another surprise that we can help our taxpayers or viewers avoid, something we see often.
Related to missing income, we're talking about retirement distributions, in particular, when you take them early.
That's right. There's a certain age you have to be able to get the tax benefits of putting away money in your 401k or retirement account. What is that age, Phil?
59 and a half.
Okay. And if you take it out earlier, which many people do because they have a hardship, it can result in significant penalties and some downstream impact. What would that look like?
That's an extra 10%. And oftentimes what I see on a lot of these cases is that the retirement company, Fidelity, name your favorite retirement company, will only withhold about 8 to 10%. And that's nowhere near enough to cover the taxes, let alone the extra 10% in penalties that you're going to owe.
Right. Your tax rate's probably higher than that, and there's penalties on top of it. So the required withholding is usually around 10%, like Phil mentioned. So there's a big gap. And you may forget about that gap until years down the line. And again, guess who's responsible at that point?
You are.
Okay, Phil, let's talk about the last surprise that we don't want people to get. And this is often one that probably isn't talked about enough, but one that is significant, usually because of the dollar amounts and the amount they could owe when they receive it. What is that?
It's the cancellation of debt income.
Okay, so that could result in any time a bank or financial institution or anybody you owe money to writes off a debt, gives you a break. You think you're walking away scot-free? Not really. Here's what happens.
And oftentimes we see this when your house gets foreclosed on and the bank later sells it. They've forgiven your mortgage. But did you know you have to pay income tax on the debt forgiven?
It's treated like income. So oftentimes it could be, like Phil mentioned, a foreclosure, or think about credit card if you're written off a debt there. So Phil, what about medical debt? Does that qualify?
Even medical debt. In fact, anytime a creditor forgives their debtor any amount of money owed to them, they'll issue a 1099-C to the IRS to let the IRS know that they've written off this debt and now it's imputed income to the taxpayer.
Wow, you can see how this can become so significant. Those are large dollar amounts. Foreclosure, medical, credit cards, significant impact. Maybe not as prevalent as the CP2000, but way more damaging. Agreed?
And often where you see a 1099-C, it'll also show up on your CP2000.
There you go. It all comes full circle. So Phil, what are some of the things that taxpayers can do to try to avoid these surprises and get ahead of them?
I think a big part why we have this show is education, understanding the tax implications of these transactions. And this is good news, right? Not having to owe this debt anymore, this medical bill, but remembering that there is downstream impact to your tax return.
So Phil, how would our viewers out there avoid these surprises? What's the best advice you can give them?
Well, the responsibility is yours. So take control of what you can. Stay informed, be proactive, assume the transaction is taxable when in doubt, and prepare to write that check.
Yeah, it's not a fun check to write, guys. I realize, like Phil said earlier, it isn't easy to keep on top of all this stuff, That's why we came up with a product called Optima Tax Shield to help you monitor what's happening with your IRS account, who's reporting income on your behalf that you may not know about, help you stay on top of things. And it'll also provide you some audit protection for the CP2000s and keep you just informed and keep you out of this mess. That wraps up the show today. Thank you for joining us. Phil, any last parting words?
As usual, do something. Even if that bill looks really big, there's always a way out. Call us if you need help.
And enroll in Optima Tax Shield. We'll see you next time, everyone. Thank you for joining us. Hey, everyone. Thank you for watching today. Please remember to like
and subscribe.
And if you are a taxpayer who owes, we encourage you to go to our website, optimataxrelief.com.
And remember, do something.